Hello everyone, welcome to AdiTrade. Today we're just going to see how the market is going to play out next week. What are the important levels, how we can trade. It's more like a weekly analysis for next week. And is this, whatever is going on in Israel, the war where Israel has declared the war, is that going to affect our markets? We'll just go ahead and see that. First and foremost, when it comes to the Israel war, it's just contained with Israel and the local trouble as of now. If this escalates, right, if more people get involved, if more Arab countries, if somebody is not aware, probably there are a lot of videos that they can watch. I'm somebody who tracks all the global events. If there is escalation where a lot of other Arab countries join in the fight, then there could be a significant spike in the oil market. This is the crude oil chart, 1 hour chart of the MCX crude oil. In case we break out of this, right, and not sure if tomorrow if there'll be a very significant impact, because as of now the war is not escalated to a level where it could severely impact the oil prices. But if the oil spikes up, if we come back to the 7,500 level, then there could be some pressure on our Indian market. So what we need, some important things to track tomorrow is the crude oil. See, based on the charts, if you just look at purely charts, right, in crude oil we did get a nice sell-off and we're kind of forming this type of an ending diagonal triangle which could spike up. So some spike on the crude oil is indicated on the chart. So let's see if this holds good. There could be some up move, but if this level breaks, if all the war situation dies out, if this level of 6,800 breaks, we could see lower levels in crude. So this crude chart is something that we'll have to track tomorrow. Now coming to our Banknifty chart, on this hourly chart, in Banknifty we have been following this type of a pattern, right? Every time we come closer to this black trend line, we have been getting some sell-off, and we come closer to this bottom black trend line, we have been getting a buying. So nothing different tomorrow. In case if we remain within this level, right, this black, we can look for some kind of a short opportunity if this black trend line doesn't break. If this breaks, and if there is nothing with the oil prices, if there's not significant up move, we could see levels of 44,900, this level, this high, in case we start trading above this black trend line. And if we take some kind of a resistance here and come down, we should be careful with these levels, that is 41,100 and 44,000. We will see that in our 15-minute chart. This is the 15-minute chart where I just have all the levels marked. See, and this short trend line is also something that I'll watch out for. Multiple times we have taken support along this trend line on the 15-minute chart. So in case we trade below this, I don't mind looking for a short position. See, there is a gap here, so there is a possibility we can come to fill this gap between 44,100 and 44,000. And in case we trade above 44,500, the next significant resistance is this, where multiple times we kind of made this double top here, that is 44,750 and this level of 44,940. Now what are the predictions for tomorrow, right? The US market on Friday closed pretty strong, 300 points on the upside. Now that has put SGX Nifty at a 100-point gap up. So if this sustains, if whatever the war news is neglected, and if this gap up sustains, then we will have to be a little careful, because we could open somewhere over here, somewhere close to 44,700 or somewhere in this region. We'll have to be careful, because unless this is broken, we cannot assume that this will break easily. There is a chance we can come until here, kind of take sell off and come down. And other intraday trend line that we would need to follow is something like this, right? So in case we come on the upper end of this channel at about 44,600, or even if we go until here 44,740, we'll have to be careful to see if the gap up holds. I'll just put on the CPR for tomorrow to get a better sense of the target. So in case we get a huge gap up, right, then all that we have to do is just wait and see where the momentum comes. If we get a huge gap up somewhere close to this R2 or R3, I don't think we will break and go higher. There's a chance for reversal. So when the momentum starts on the downside, that's when we will have to take a trade and watch out for this black trend line. That's the plan for tomorrow in case we get a gap up. But chasing the gap up is a bad idea. Why? One is the Israel war sentiment, the crude oil, something that we have to track. And the other thing is people are sitting with some good profits from this level, right? From here, we were expecting a bounce and people are sitting in good profits. So there could be a chance, if there is a big gap up, there could be a chance of some kind of a profit booking and a dip on the downside. In case we fall, where all we can fall, we can take support along this trend line, this black trend line. If not, the pivot point, and especially this gap is something that we'll have to watch out for. In case we come down, 44,100 is something where we can take some support or filling this gap. So where I would look to short is over here, 44,700, in case we get a nice divergence and depending on the open interest and the price action, or if we kind of break this trend line on a 15 minutes chart and sustain below this, because always there can be a false breakdown and go up. So whatever happens, this black trend line will be our stop loss and look for a short trade. In case we get a pretty flat opening, now say the US market dips in the morning, and in case we get a pretty flat opening, even then wait to see if this trend line breaks and then probably try and take a short until 44,100. Or if we get a pretty flat opening and if we take support at this trend line and go up, yes, we wouldn't mind buying with this trend line as stop loss and target as 44,700. So this is my trade plan for tomorrow. See the overall market, right? If you look at this hourly chart, the way it is in a sideways move, even if we go higher, this is just for an overall view. Even if we go higher, it's not something that the market will break, and even in case we trade above this trend line and go higher, it's not that market will break and go for an all-time high level. We could be in this type of a sideways move in this month. That is what we are expecting. So the best thing to do is intraday positional traders will have some difficulty in this type of a sideways market, right? See, you can see an example over here. You thought this was a nice bullish candle, but we got a nice sell-off. Again here, we thought the market will go up, but we got a sell-off. So the best thing to do is play from a level to level based on the resistance and keep very short intraday targets, not a pretty long one. Keep short targets. That's the only way to trade this market. But overall, if we look at the overall structure, the market is in a sideways move and it will continue to be sideways, where we will be making a high low, and at some point when we kind of break out of this consolidation, that's when we might make a new high, or if we break down, we might make a new low. We might come closer to this level, that is around 43,000. The exact level is around 43,000. This low, we could come closer to this low. So that's our overall view. If for intraday traders, it's just best to capture in this type of a sideways move. If you get 50 points premium on the option price, it's a big deal. It'll be a pretty good one. And the same thing with Nifty. On this hourly chart, Nifty has beautifully taken resistance kind of along this trend line. Okay, in case we get a gap up, we could face good resistance at around this level, 18,000. I don't think breaking this level, 18,800, or breaking this high of this gap area will happen anytime soon. So I would not be aggressively bullish. It's just the intraday moves that I would want to capture. This gap that we have between 18,880 to 18,840, this 40 point, I don't think, even if we come until here, we could take some resistance. Breaking this and going higher, I don't see that happening anytime soon. Now, coming to the 15-minute chart of Nifty, how we can trade is, the logic for trading Nifty and Banknifty is pretty simple, right? This is the big resistance zone that I've drawn, where I'm expecting some kind of a reversal from 19,800 or between 19,700. See, the logic for trading tomorrow is pretty simple, right? If we get a big gap up, just stay out of the trade, wait to see if the momentum is picking up on the downside, only then try and do some scalping. Getting a gap up and then buying, expecting a bigger move on the upside, even if it happens, we would want to ignore that trade. We are not, see, always buying at a point where the market kind of reverses. If you buy, it is better, it will be a much better trade. Or if we go up and if there's a possibility of reversal on the downside, if you buy a put here, that is what we should be aiming at, right? So our plan is, if in case we get a pretty big gap up, just stay out of the trade. If the gap up doesn't sustain and we start coming down, that's when we will try to scalp. In case if we have to go up, if we get a gap up, right, there is a possibility we can come take support of this trend line and bounce. So this short trade is what we would be interested in, and then we will see if the long trade picks up. But some of the support for Nifty on the downside is this gap that I'm going to mark. In case we come down, we could take support closer to 19,580, where we can fill this gap. On the higher side, this is where, even in case we go up tomorrow, we should be careful. I'm not expecting break of the 17,800 that easily tomorrow itself. So this is the zone that we'll have to be pretty careful. That's it for Nifty and Bank Nifty for next week, and all the levels that we have marked should help throughout the week. And let's see if it's easily tradable. Thank you.